Hewlett-Packard is struggling to turn its business around. The company reported earnings after the bell yesterday, which fell short of estimates, blamed on a slowdown in IT spending. The picture doesn't look much better for the future, though. Meg Whitman said on the call that there is, quote, a difficult business environment for several quarters to come. As Bloomberg's Cory would like to point out, these difficult quarters have been happening for years. And he joins us with more in his Yeezy Boost shoes. Cory.
Meg Whitman actually also is known to wear the Yeezy Boost shoes.
I mean, she should stop spending money on those now, I'd say. Restructuring still lies ahead as well for HP. And is this like a never-ending restructuring
Two companies, November 1st.
So there will be this split. And you would think that once they right-size these businesses and after more than a decade of restructuring, the restructuring charges would stop. But
the split will be, by the way, you're used to this, right? But the split, just to explain for people who aren't aware.
Enterprise business.
On the one side, they're going to do the enterprise business, which is like an IT services. They go out and
the servers.
Software servers, yes.
On the other side is the PCs and printers and the
thing where they traditionally had most of the free
ink
cash flow.
That we all know HP so well for.
Ink and paper has been the driver of free cash flow for that company. We don't know which way the debt's going to go. Stock is up today on the reaction to these earnings. In the midst of this market sell-off, the stock is still up. So you wonder, how can a company report really crummy top line? The revenue for this company was down 8%. It's the biggest decline they've seen in quite a while. But you've seen declines in revenue on a year-over-year basis.
Why the sell-off?
How can they miss on the top line?
No,
and beat on the bottom line?
So why is the stock up?
Please answer your question.
The answer to my question is was an item that was, I think, really overlooked, not mentioned in many of the analyst notes, overlooked by a lot of people. The massive restructuring charges that this company has taken in every single quarter, nearly $649 million in the quarter a year ago, just $25 million yesterday.
Oh. Less bad.
By having, well, they have a lot of leeway over how they report this restructuring charge, over when they take the restructuring charge. It's not illegal, but it's a long-term restructuring. They decided to take only $25 million of expense.
Yeah, but if it's a one-time charge, don't they throw it out anyway when they're looking at the overall value of the company?
It's not one time. It's a movable number that they can choose to take how much they take or spend restructuring in a given quarter. And without having done that, they would have missed the earnings per share substantially. Well, there were 2 cents of gain of other items that they gave them 2 cents a share. I'm trying to say something. What I'm trying to say,
dude, I don't think you're right about this. I don't think that it's only that number. Crawford Del Pret, with whom we both spoke yesterday, said he loved the margins in the IT. No.
He said it was encouraging.
He wasn't terribly disappointed by it.
Less bad.
So that's another thing that was less bad. So there's two things at least that were less bad. The margins on the what? On the IT consulting side of the business.
The IT consulting business was a lot smaller, and he liked the fact that was a lot smaller. It was the margins were a little bit better as well. But I'm just pointing out that there were a lot of one-time items that made these numbers look a little bit better, and some, particularly that restructuring cost, was really, really odd, given that this company's got a lot more restructuring to come and has had, of course, more than a decade of it in the past.
No short covering? Not an issue?
Maybe. It's hard to say.
I mean, I don't know. I mean, that's why but
the chart is ugly. I mean,
the stock chart over the course of last year, I think the stock's down, what, 22%? Well,
that's what I was saying. Someone comes along and says, you know what, I can make my money, I'll buy back my shares and book my profit.
I don't know if you're covering a lot of shorts in this market today.
All right. Cory Johnson, thanks so much for joining us.